we've kind of highlighted the danger that Chinese slowdown in growth brings to turning what is really a fundamental EM crisis to a systemic EM crisis. Now, perversely, such a systemic EM crisis would probably be bad for peripherals. Fundamental good, because actually it's not a risk-off across the board. It's more of like a nuanced risk-off.
Yeah, I would agree that it's very unlikely that China or emerging economies in general cause a U.S. recession. Just the U.S. is a more independent and solid economy. But what I would watch is that we could absolutely have a profit recession in the S&P 500 if the emerging economies were to weaken substantially, particularly if it were to cause a lot of weakness in the commodity complex. So what we keep our eyes on are not just copper, but most importantly, oil prices. I could at least point to what's been very healthy and high oil prices lately, but we're not going to take that for granted, and that's what we're watching.
I think the word comfortable is wrong. I do think the market is discounting the very high probability, in my view, that actually the Russian government do very little. And, you know, despite the fact that they deny it, we all know that there is a very significant Russian military presence in Crimea. Yeah. The risk is that Crimea goes the way of other, let's call them, areas of Russian influence, like South Ossetia, like Abkhazia, like Transnistria, and I apologize, I probably mispronounced that. But we have these zones of almost what I would call legal limbo land, where it's actually not quite clear what their constitutional or sovereign status is. And I suspect Crimea is going to end up in exactly the same situation.
Some of it, Jackie, it definitely is adding to the situation, adding to the gold bugs bidding up gold here, you know, at least coming out of Europe. But I don't think that's the whole story, Jackie. When you look at the stock market here, making all-time highs on the year this year, and you see the VIX also up on the year, those two things should counteract each other. But really, the VIX measuring fear in the market has been rising this year. That should subside when the market makes new highs. So I think fear overall in the overall global economy and equities is what's driving some people to at least allocate to gold this year. And that fear is sort of driving the gold bugs. It's driving gold higher. It's more than just Ukraine.
It hasn't been driven by the physical demand. That has waned as the price has gone higher. This is more the investor. I think the inflows in the ETF in February were up. Obviously, for 13 months, it was outflows. And you're getting this fickle, and this is the investor is much more fickle, so this can turn rather quickly. But I think above 1355 is important. Maybe we can get up to that all-important 1425 level and see what happens up there.